What is going on, y'all? This is Pay Me in Dividends, and today is December 21st, 2024. Now, before we jump into the video, I do want to go over my portfolio. Now, yesterday I dropped a video on December 20th, and my portfolio was at $80,000. Now, today is Saturday, the market is closed, but before the market closed yesterday evening on Friday, my portfolio jumped up $4,000 and I'm now at $84,182. Now, what happened, right? Before we jump into it, let's just go over my holdings very quickly. My holdings have remained the same. I have 1,000 shares of AIPI, 1,000 shares of MSTY, and my new addition to the portfolio is RDTE. So let's talk about what happened, right? So if we look at Bitcoin is now at $97,000. But yesterday it dropped down to $93,000, right? So there was a drop. Actually, it looks like it was around $92,000, right? So that caused a market pullback. Bitcoin, along with VOO, had made a slight drop, about 2 to 3% over the past 5 days. But now we can see after market close, it's back up 1%. So it's the same thing we spoke about in yesterday's video. Is all about taking advantage of opportunities. The market is going to pull back. The market is going to have red days, but those are the days where you need to have cash available to take an opportunity to build a position so that you can grow your income portfolio. Let's look at another opportunity in the market, right? Nvidia is now up 2% after market after having a slight drop, right? There was a slight drop here. It fell down to $22 and now it's back at $23. And if we look at the underlying Nvidia, we can see that just yesterday it was below $130 a share. Now it is back up to $134 a share. So again, we can see that there's opportunity in the market. You just have to be ready in order to position yourself so that you can strike on those opportunities. So again, it's just a reminder, y'all, when there's pullbacks in the market, don't be afraid, don't panic. Just make sure you're prepared to take that opportunity. I'm not telling you to put all your money into the market every time the market is red, because there can be extended red days. There can be a bear market. But again, we know, like we spoke about in previous videos, that the market always goes up over time. As we can see here, the S&P has always gone up over time. But when the market is red, those are great days to not panic and actually use that as an opportunity. Because if you liked a stock when it was up high, right? If you liked the S&P when it was up here, you should absolutely love it when it's down here. That just means that it's at a discount. Same thing when you go shopping at the mall for new clothes and that favorite shirt of yours is now 50%. You liked it when it was $50. You should love it when it's $25. It's the same concept. The only difference is you're investing into an asset and now you're generating cash flow. So I just want to go over that very quickly. Again, my portfolio was at $80,000 yesterday, and by the time the market closed, it was at $84,000. So the next thing I want to talk about is I want to talk about AIPI one more time, because I had someone in the comments ask me, why is it that AIPI makes up majority of my portfolio? This is the reason why, right? So we can see AIPI remains pretty stable. It remains around that $50 share price. If we look at the chart, right, it does fluctuate, but it always remains around that $50 share price. Now, the biggest reason why I invest in AIPI is the holdings and the strategy that they employ on this ETF. This ETF is a lot different than something like YieldMax. And I love YieldMax, I love Misty, I love MSTY. There's a reason why I have 1,000 shares of it, because I absolutely love it. I absolutely love the high distribution rate here, right? 184%. But the thing about MSTY is they don't actually hold shares of MicroStrategy. All they do is write synthetic covered calls or synthetic options on MicroStrategy in order to extract a lot of premium, and then they take that premium and they're able to pay us this very high dividend because MicroStrategy is so volatile because of their Bitcoin holdings, and so we're able to get a huge dividend out of it. Now, with that said, the dividends fluctuate, right? If we look at the dividend history, back in April, they paid about $4 a share, then $2, then $3, then $2, then $1, $1, $4, and $4, and their most recent payment for December was $3 a share, which is great. It is awesome. I plan on holding this long term. Hopefully the fund stays around, but the reality is these dividend payments fluctuate. And so for me personally, I want an ETF or dividend ETF that remains somewhat stable and predictable. So as we see here, AIPI has remained very, very predictable with this 34% dividend yield. And you can see here the monthly dividends do not have a big variation, right? $1.48, $1.46, so on and so forth. The dividend has remained very stable, which for me is a core position of my portfolio because I'm able to predict exactly how much money I'm going to make in that given month, which allows me to budget and sort out the next play I want to make or the next position I want to make in the market, right? So I think it's important to have one of these high yielding ETFs like an MSTY, but it's also important to have an anchor like AIPI that actually pays a consistent dividend. Now let's talk about the different strategy, right? So we went over MSTY and the strategy that they employ using synthetic covered calls on a very volatile underlying stock, which is MicroStrategy. Now AIPI is a lot different, right? If we look at their holdings, they actually hold, as you can see here, shares held. They actually hold shares of multiple different companies, right? We can see Palantir, Nvidia, CrowdStrike, all the way down here. We can actually see the weighted percentage of each company they hold, along with how many shares they hold. And then if we scroll down a bit more here, right, these are all shares that they hold. Right here where the shares become negative, those are open option contracts right there where they're actually selling covered calls on these stocks, right, all the way down here. But the top half of their holdings are actually the weighted holdings of this fund, where they actually hold these stocks, and it's not an entirely synthetic option play. And so that is the reason why AIPI has been able to remain so stable at that $50 share price, is because through the volatility, they still hold on to the underlying asset, and all they do is sell covered calls, right? If we look at their objective, you can see own AI stocks, write covered calls, enhanced income potential. And so their investment objectives are capital appreciation and current income. So the 34% dividend yield is not as high as MSTY's 184% dividend yield, but they're just employing a completely different strategy, which is great because in your portfolio, you want some diversification, right? You don't want all of your funds to be employing the same strategy, because in a prolonged bear market, your portfolio is going to tank. So you want to have your core position be somewhat stable so that your portfolio has that anchor and you can weather the storm long term while still collecting dividends. And so this is another reason why I chose to add RDTE, because now I'm even more diversified, right? Now I have 3 different ETF managers. I have Rec Shares, I have Yield Max, and now I have Roundhill. And Roundhill is a weekly payer, as we know, which will allow my portfolio to compound even quicker. And they employ different strategy themselves as well. And the underlying asset is different than these two as well, right? Roundhill RDTE is more small caps, MSTY is more MicroStrategy Bitcoin related, and AIPI is more AI tech related. And all three employ different strategies in their own different ways, and they generate money in their own different ways, which gives your portfolio that diversification. So again, guys, the main objective of this video was to just go over AIPI again and show you the difference in strategies between these funds so that you can understand why is it that I hold this as my core position and why I believe in it long term. Now, I'm not telling you to invest into this position, but this is the reason I position myself in this fund and why I'm being strategic with these funds. My goal is not to own every yield max fund. I'm being very strategic and very surgical about which ones I'm putting my money into. I'm not going to load up my portfolio with 10 different yield max funds because they all, for the most part, employ the same strategy with different underlying assets. I'd rather diversify myself between different ETF managers who handle their funds in 3 different ways and pay on different dates and have different underlying assets, so that although I'm enjoying this high dividend yield, I'm still protecting myself long term and I have peace of mind with my portfolio. So again, guys, this is just what I wanted to talk about. The market isn't going anywhere. It pulled back a little bit. There was some red. There was some blood in the streets a little bit the past few days, but the market is back in the green. So again, guys, just remember that when there are red days, that means that there is opportunity in the market. Now, yesterday I posted a video. I believe I was around 460 subscribers or something like that. Now I'm at 473. As always, guys, I'm super grateful. I really appreciate you guys taking the time out to watch my videos. I'm going to continue to put out content and try to be as creative as possible with these videos. Let me know in the comments, guys. What do you think about AIPI? What do you think about yield max? What do you think about these MSTY distributions? I really liked the $3 dividend this month. Hopefully they keep it up. I love that Bitcoin is looks like it's bouncing back from yesterday's 92,000. Now it's at 97,000. You guys let me know in the comments, what is your core position? Or if you haven't figured out your core position, what do you have on your watch list? Let me know your thoughts in the video, under the video in the comments. As always, guys, I really appreciate you guys checking me out, and I will catch y'all in the next video.